The Bitcoin market is moving again. As of May 3, 2025, Bitcoin is trading at around $96,270, which is more than 30% higher than it was at the start of the year. What's behind this renewed momentum isn't just speculation or excitement. The real driver is the massive inflow of capital into spot Bitcoin ETFs. In the United States, in the last 3 trading days alone, more than $1.2 billion have flowed into these ETFs. Some of them saw over $400 million in a single day. This is not a small shift. When institutional investors start moving money at this scale, it's a sign that something deeper is changing. The question is whether this is the beginning of a sustainable trend, or just another temporary spike. To understand why this matters, it helps to know what a spot Bitcoin ETF actually is. Unlike futures-based ETFs, these funds hold real Bitcoin. They allow investors to gain exposure to Bitcoin, using traditional brokerage accounts without managing wallets or private keys. For large institutions like pension funds and asset managers, this makes Bitcoin more accessible than ever before. That level of accessibility is what makes this moment so important. For the entire crypto market, what's especially interesting is the timing of these inflows. Back in early 2024, when spot ETFs were first approved, we saw a rush of enthusiasm. But soon after, the market pulled back. This time, things are different. Bitcoin has just gone through another halving, reducing the supply of new coins. Prices are rising steadily, but the market doesn't feel overheated. Instead of reacting to hype, institutions appear to be building positions with long-term intentions in mind. This kind of gradual accumulation tends to create a solid foundation. It's not about trying to chase the top, but about preparing for what's ahead. With supply decreasing and demand increasing, the market is setting up for what could become a major breakout. Looking at current price levels, Bitcoin is testing resistance near $97,000. Support has been holding at around $94,000. If the price manages to break through and hold above that resistance, we could soon see a push toward the $100,000 mark. From there, a new all-time high becomes a real possibility. Still, even in a strong uptrend, short-term pullbacks can happen at any time. On-chain data shows that long-term holders are not selling, and that most of the recent activity is coming from short-term traders. This kind of setup often precedes a larger move. So what does this mean for individual investors? If you're asking whether now is the right time to buy, that's a fair question. But it's not just about timing. What matters more is your strategy. Instead of trying to predict short-term moves, it may be more effective to focus on consistency. Many experienced investors use a method called dollar cost averaging, where they invest small amounts over time rather than all at once. Others choose to balance their portfolios by holding both ETFs and actual Bitcoin, depending on their goals and risk tolerance. The key is not to be the fastest, but to stay in the game long enough to benefit from the trend. The bigger message here is that these ETF inflows are not just numbers. They reflect a deeper shift in how the world views Bitcoin. Institutional capital doesn't move lightly. When it comes in like this, it often means long-term change is already underway. Bitcoin is no longer just a speculative asset. It's becoming part of the global financial system. That's why instead of trying to guess when Bitcoin will hit $100,000, it might be better to ask whether you are positioned to grow with this shift. Building a thoughtful, flexible strategy now could make a big difference in what happens next. In the next video, we'll take a closer look at how this institutional wave could impact the altcoin market. And we'll explore what major projects like Ethereum and Solana are doing to adapt to this new phase. Thanks for watching, and I'll see you in the next one.